side now. You gotta pump gas anyway. You might as well make some money doing it, but you can't make any money unless you use that promo code LEGEND, LEGEND. It's real simple.
Good evening, good evening, good evening, and welcome to another Wealthy Wednesday here at My Turn to Own. My name is Shanae, and I am a home advocate team lead here at My Turn to Own, and I'm going to let you all know what the rules of this meeting will be. So, first and foremost, everyone, please mute yourself. Everyone will start off muted. Upon entry, everyone, please mute yourself. If you would like to speak, please use the chat box. If you would like to physically say something, please raise your hand and we will be more than happy to call on you. So, without further ado, we do have Miss Sade Dejour.
Thank you, Ms. Shanae. Welcome to Wealthy Wednesdays at My Turn to Own. My name is Sade, and I'm a housing advocate here at My Turn to Own. Our mission here is to help raise the rate of home ownership by 75% for all. Some of the things we offer is credit remediation, micro mortgage financing, down payment assistance, credit builder assistance, and agent matching. Tonight's topic is the lending process in Section 8. So without further ado, our guest speakers tonight will be Ms. Wheatley and Ms. Debra.
All right, Miss Deborah, if you can kindly introduce yourself for everybody in the audience.
Sure. My name is Debra Schlager. I work for Associated Bank. I have been in the mortgage industry for 42 years. I deal heavily, Nicole and I, with the Section 8 voucher with the Chicago Housing Authority to get with your Section 8 going from rental to being able to purchase a home. Tonight, we're going to talk a little bit and answer questions, how you can qualify, what you need to do, credit scores, how much money you need to have saved. And then I did put an email in the chat, and I can put it up again. If you feel that you qualify, or even if you want more information, that you can contact the person at the CHA, and they have meetings once a week, and you can get into the meeting, and then they will send you paperwork to apply to be able to go from renter to owner.
Perfect. Thank you so much. We do have a lot of people who are very interested in this topic. We do have people who are on Section 8, know someone on Section 8, and we want to know one thing. Is it possible to be a homeowner with a Section 8 voucher?
So yes, it is. A couple of the guidelines. First of all, they are requiring a credit score of 640. Now, the 640, the reason being to get any down payment assistance grants, because there are down payment assistance out there and there are grants available to help with your down payment and closing costs. But you have to be at a 640 minimum in order to get any grant funds. And also for first-time homebuyer programs, you need at least a 640 for the first-time homebuyer programs. They also require you have to have $3,000 in a savings account, not saved at home. It has to be in the bank because with the Choose to Own program, they need documents from you, and they are going to ask to see that bank account that you have the money in the bank. And the reason they say $3,000 because you have to do a home inspection. Under the Section 8, the Choose to Own program, they do home inspections. The Section 8 does, the city of Chicago, they go out there, they inspect the house, and whatever repairs need to be done, the seller needs to do those repairs. Attached to when the realtor presents the contract, they have to present this rider that states that the seller, whatever repairs need to be done, that the seller will do those repairs. Most of the repairs have to be done prior to closing, unless it's something with a roof or something that's outside, and weather permitting, they won't allow it because there's snow or it's cold. Every once in a while, we do get an exception on that, and they can escrow the money to have the work done after closing. Not too often though. With the Section 8, you cannot buy a foreclosed home. You cannot buy a short sale home. They also are not allowing the real estate agent to show any homes that are occupied, that are tenant occupied or owner occupied. They want the property to be vacant. Now, when Nicole gets on, she can go into that a little bit more since she's a real estate agent. They have given exceptions in order to show those properties if there are tenants in the property, but their guidelines are they won't show any properties if it's tenant or owner occupied.
And Deb, you're actually 100% right, especially about the tenant portion. And that's because of a lot of different reasons right now. COVID, tenants could pay or not pay. You could potentially be in a very long eviction process to get them out if they do move in. Where they're giving us some leniency and providing us the opportunity to be able to have a little bit more leverage is if there's an owner-occupied home and this home is also in the condition, like it has to look like it's more like a staged home. So that means that they could do a thorough inspection. We have only done 1 or 2 examples of that right now,
right,
where they're allowing that. And it really is on a case-by-case situation. And it also has a lot to do with the condition of the home. And that's because of as realtors, we're working to find homes in some cases for people who may only be approved for $140,000 or $150,000. So when you look at the current housing market and you see the housing stock that's out there, some of those homes may need to be repaired. So sometimes you run into a home where a homeowner have taken very good care of that home, and the house has great bones. It's a good foundation, and it only needs a few things to get it Chicago Housing Authority ready, CTO ready. So then in those particular cases, are we able to take a look at that, all the details with it, and determine if we should ask for a special request on that particular type of a home?
And Nicole, I did speak a little bit about repairs that the seller, that there's a rider attached to the contract, and that the seller has to agree to do repairs, whatever the inspector comes out and asks for whatever repairs, that the seller has to do those repairs. And that inspection is separate from the inspection that the buyer has. The buyer also has to do a home inspection on the property.
You know, Deb, I'm glad you mentioned that, because way too often when people are going through the Chicago Housing Authority program, I think that sometimes we pick up and hear some of the things that sound the most desirable, right? Like you don't have to pay for the inspection, or you don't have to pay for the CHA inspector, right? But you must pay immediately for your home inspection. Way too often we run back into the situation of someone misunderstanding that. So I want to talk about that for just a quick second, if we can. When a home is being prepared for the Section 8 inspection, the realtor must understand the Section 8 requirements for CTO homes. They must understand it, because I can walk into any home at any given time and know if that home will be approved for the inspection with a little tweaking, or if we need to walk out of there. And so you got to work with someone who is experienced and understanding the program, so that you know when you're walking into homes. Like, I mean, even just recently, I was walking in with a young gentleman who was approved. So we're approval with 140. A lot of those homes, unfortunately, and I want to have transparent conversation. A lot of the homes that's in that price range, you're going to find them in West Pullman and Roseland area. That's maybe in really good condition still. Why is that? Because the market in Chicago is just really going upward, right? And so when we go in and do a search, I do a complete search for my client, way below what they got approved for and a little bit above it. And then if and I do the entire city of Chicago, and I look through every single property, and I have to read every detail, even before I hit send, to forward that over to the client, because I don't want clients to look at properties that I know they can't purchase. It just doesn't make sense. So we're also looking at the taxes to make sure that it's aligned with what your lender has approved you for. But there's a lot of intricate details to this process. But I'm going to tell you that for any person, I learned this from CHA, every single person with a housing voucher can get into this program, and they could start working it to get themselves to the point of being eligible to purchase a home over time. And I highly recommend that people do that, because it's nothing like going up at once and possessing a piece of land, and becoming a homeowner.
And also with that, Nicole, I did tell them a couple of the requirements about the minimal credit score they want is a 640, and that you have to have $3,000 in the bank saved, not saved at home. It has to be in a bank account. Also, with the Chicago Choose to Own, you can only buy in the city of Chicago. Now, the Chicago Housing Authority is separate, and it's Cook County, but it's suburban. So we're not talking about that. This is only for the city of Chicago that you can purchase. This is with the Choose to Own, not suburban. Those are different guidelines, and Nicole and I are not doing those loans right now. We're trying to get into that, but we're not approved to do the suburban Cook County, only the city of Chicago.
Well, let's talk about that for a second, because I really want to bring to everyone's attention how important it is to analyze the taxes of a property. This is something that we go into often, even when a person says, you know what, well, I'm thinking about moving into the suburbs because the city is too bad, and they want to start the process of transferring over. They have every right to do that. But I highly encourage every person to check out the taxes to where they want to live at. And let's just give an example. I just worked with a gentleman. He was approved for $200,000. And I know that, Deb, you can give more of a better breakdown on this. He was approved for $200,000. And he wanted to move to the suburban area. So I'm like, okay, cool. That's not a problem. I just want you to understand that if you move to the suburban area, the taxes here could be $2,000, $3,000, somewhere like that, right? Just as an example. But if you move into the suburban area, the taxes could be $10,000. So if you're buying a home where the taxes are $10,000, if you divide that by 12, it clearly tells you about how much you're going to be spending per month on that property, even before you pay insurance and or a mortgage. And
yeah,
so
at $10,000, the taxes alone are $833 just for the real estate taxes, not counting your homeowner's insurance or the principal and interest. And to add to that, Nicole, we have had a couple clients that wanted south suburbs. The houses they picked were $150,000. But when we looked at the taxes, they were $7,000 and $8,000 just for the taxes. So they might have qualified for 150. I can qualify them at that for a sales price, but not at $7,000 or $8,000 a year for real estate taxes. They do not qualify at that.
Yes, and so people are quite surprised when they learn that, oh, I was approved for $200,000, and they go out and try to find a $200,000 home. And when they look at the taxes, they realize, oh, wow, my approval just went from $200,000 to $120,000. It's a very big difference.
And Nicole, and another thing with the real estate taxes, when you're looking on the computer and people go to Zillow or any of those other sites and they find houses and then they bring it to you and say, okay, I want to see this house. When we look up the tax bill, because we have to go to the Cook County portal to get the exact what they are, taxes might show only $1,000 on that listing, but in reality, that homeowner could be a senior citizen and they can have a senior citizen exemption. Plus they can also have a senior citizen freeze, which means they freeze the taxes, and whatever they freeze it at, if they froze those taxes at $1,000, their true taxes, when we pull it up on the website, might be $4,000, but because their income is low income, they get to freeze their taxes and pay just that amount, and not what the true taxes are.
I'm so glad you mentioned that. This is a true story. The same gentleman that I just told you guys about, he wanted to put in an offer at a property out in Matson, okay? And we actually were moving forward and getting the deal. I had to go in the Cook County Treasurer's office and verify what the taxes were. They were $5,000, but the property was at $160, so it was working, right? It was making sense. So then he looked and saw while they were waiting to make a decision on our offer. He was probably maybe a little impatient and was like, well, kind of want to know now. And so he decided that we should look at another property. Right now, I was out of town, and so the other showing agent showed him the property for me. I had showed him how to go out 3 times to check the taxes on the Cook County Treasurer's office. So I get this urgent message, let go of that property over there in Madison. I want this other one in South Holland. I want it right now. The tax is $5,000. This is the price. Put in an offer for me immediately. And I said, okay. I said, wait a minute. Now let me check the county tax record, again. I said, did you get a chance to check it? He said, oh, no, I forgot. I said, okay. Yeah, I'm like, that really matters. So let me pull it up and take a glance at it. The taxes were almost $11,000. Almost 11. So this person was getting a homeowner's exemption and a senior exemption. They were getting 2 out of the 3 that they could get. So when we pulled it up, at this point, now what happened? This is really all the true story. So now he wanted to cancel the contract still on the Matson property because he saw one that was really completely out of his financial range to purchase. And then that's what he had his heart set on. So, and now, as of this point, he doesn't have a home, right, at all. Because we kind of walked away from a home that, it was in pretty good condition. There was a little things that needed to be done, but I cannot overemphasize the importance of checking the taxes. So, I used to bug Deb all the time until she trained me on how to look it up. I'm like, Deb, this is work. But I stay very closely connected, and I suggest any realtor would do the same, to stay very closely connected to the lender so that they are really, especially if the numbers are tight. And in the program, a lot of times the numbers are tight, but, it's possible. Even though we're giving you all the information today to digest so that you have an understanding of how it goes. And I love to give examples because you may not remember all the technical stuff, but you will remember examples of what it is that we said. Those things will stick into your memory when you're going through this process. To walk through this process is an absolute, beautiful, amazing blessing. I just want to say that. right? But it is a process. And sometimes when you are going through a new, amazing, arising new opportunity, it is not always the most simple. And I would say go into this process having thick skin, ready to be prepared for what is necessary and what's ahead. The people that I see, I would say, I'm trying to find another positive word other than suffer, because I hate that word. But the people that I see go through the most conflict are the individuals who get angry quickly about anything that's outside of what they think should be done. And you just got to have an open mind to say, at the end of the day, the bank is going to provide me with the funding to receive this message. And they need to make sure that I'm legitimate. They need to make sure that I gave them accurate documents. So I'm going to have to go through a verification process. It's not always the most simple, but going with a positive mindset so that you can go through the process gracefully. The most people I see go through it with conflict, is because they're angry. Why are they asking me for that? I don't want to do that. That's not going to change the fact that you're going to have to get in that document. Or else we can't move further. We can't move further,
Well,
so prepare for that.
Nicole, to add to that also, sometimes also the new buyer will say, well, my friend bought this and my sister bought that and they didn't need this. Everything changes, guidelines, requirements, they change every single day. So when we ask you for documents, it's because we need those documents. And I also I tell all my clients in the beginning, tell me the truth about everything. I'm not taking your application. Tell me the truth so I know what I need to do and I could advise you before we put anything in the system and do a loan application. That is the best way. Tell me the truth so then I know what I'm dealing with. Don't tell me after I take your application and then you tell me you had a bankruptcy. No, tell me everything up front. So now I know how I'm going to put your deal together and I can advise you. Because once we pull your credit and it's in the system, we can't change it. It's there. I can't change it. I can't say, oh, well, we should have done this, this, or this. With these programs, with the free down payment assistance that's available, I have free down payment assistance at my bank. Plus there's grants out there. The city of Chicago has a $15,000 grant in certain areas. It's called MMRP. We can layer grants on top of each other and get you free money. But when we ask you, tell us the truth, tell me everything, we need to know that up front. So then we know how we can structure your mortgage.
It's so true. And I want to give another quick example too about some of the layering that can happen. A gentleman, he actually is very active in CHA and he's in the program. And I want to say, full disclosure, that he gave me permission to always use him as an example because I want to be able to share his success story. He was in his early 60s and had never owned a home before. And he was adamant about getting a home so that he can have something to leave for his children. And so, Deb, you work with me on this guy. You'll know who he is shortly. But anyway, when we had 2 or 3 offers in for him, okay? And then we got 2 of them accepted. And then I promise you, in both cases, the people walked away from the deal. The actual sellers did. The one was because they ended up accepting our offer and then the very next day getting a cash offer higher than what we had offered. And they didn't care that they had just signed a contract with us. They canceled our deal. It was over. Just that simple, right? That was on one of them. And then on the second deal, by the time we got through the process and did the inspection, we realized there were some things that were deeply embedded in there that you couldn't see with the physical eye that came up in the inspection. And it just would have cost way too much money for him to invest into that. With a limited income, it didn't make sense. So we had to step away from that one. But finally, on the third one, and he was getting a little frustrated. We were having pep talks each day to keep him motivated because he started to feel like I just want to quit. Sometimes it's just like you're in a race and you are almost at the finish line. You don't know who's in back of you and you are not focusing on who's in front of you. You just got to keep running until you cross. And I have to keep telling him, do not give up, do not quit, do not stop through this process. We're going to find you something. Now we get the next property. How many blessings this man got? It's innumerable. Okay. So he was able to get the bank grant, right? He was able to get a $15,000 grant. Then he was able to get about almost 3 or 4 that the max he got from the owner. And then he got all the repairs done as well that was needed. He had an overflow, and out of every place, this one became the cheapest. I mean, the most affordable out of every last one of them. And his mortgage was the least expensive because he went on and pushed himself to persevere through that. But we were able to layer so much money for him that he, like I said, I mean, we ended up, I think his mortgage he was down to like 80 something $1,000 in what he has to pay out. A very inexpensive bill, but he did have to have, the thick skin and run the race through this process. And when you have a great team working on your behalf, then you can go out and execute and make things happen.
Yes, thank you both for all of that great information. Thank you so much. We do have a question. One of the questions are, when it comes to the taxes, do you have to pay all of that up front, or is that a yearly thing, or how does the taxes work?
So real estate taxes are they're put in an escrow account. So first time home buyers, you cannot elect to pay real estate taxes on your own. So in Cook County, the taxes are due twice a year, every 6 months, the tax bill. But we set up, it's called an escrow, and we, out of your monthly payment every month, we take the principal, you pay the principal and interest payment, the real estate tax payment, and your homeowner's insurance. So you don't come up with the money. It's upfront. It's in your monthly payment. And with an escrow account, here's another good thing with the escrow. Escrow accounts, first of all, they're non-interest bearing accounts. So your escrow account does not make any interest. But if your taxes go up and we have to pay your tax bill and your escrow account is short, it doesn't have enough money because your real estate taxes went up, the bank still by law has to pay those taxes. So they pay the taxes, even if your escrow account is short, the bank pays your real estate taxes. And then whatever the shortage is, they'll divide it by 12 months, or they'll let you pay it up front to make up for the shortage in your monthly payment.
Okay. That's really good information there. Let's go. I saw that there's a couple of questions in the chat, and I apologize. I'm working from my phone because I was running to get back home and I haven't had a chance to set up the computer. So let's just go. If someone could read some of the questions out in the chat so we could try to answer.
Okay, wait, who put this one? Will you all stop helping the people that have a section, that have a voucher for Section 8? What do you mean by that? It's not a nice question.
No, well, to just answer it, no, we work to ensure that everyone has the opportunity
to purchase a home.
Yeah, regardless of their income or the programs that they're with.
Correct.
Our goal is to get them to the finish line. And that should be anyone's goal that you're working with, any lender, any realtor.
Awesome. Thank you for answering that question. Yes, that's all of our goal here, is to help everyone, and no matter what their capacity, to get to the finish line. Absolutely. So, Miss Debra, can you please give people your contact information, because people want to know how to work with you directly?
Yes, I certainly will. And we can discuss. Here's the thing. If you're out shopping and you want to see if you can qualify for a mortgage, please do not let anyone run your credit. Nicole and I work with non-for-profit agencies where you have to go through a non-for-profit. The agency, you have to get take a home buying education class. You get a certificate, and we need that certificate in order to give you any of the first-time home buyer programs plus the free down payment assistance. So please do not let anyone, while you're shopping, them say, oh, well, we need to run your credit. No, because when we send you to these non-for-profits, they do a soft credit pull, which means it does not affect your credit score at all. And this way, when I get that soft credit pull, I can evaluate it and I can tell you, okay, listen, we might need to raise your score. We can do it this way. Maybe you need to pay down your credit card a little bit, so your score will increase. Instead of having someone run your credit, the more times your credit is ran, not as a soft pull, the more times it's read as a hard pull, it lowers your score. And we don't want that. And do not, if you were looking to purchase a home, do not apply for any credit. Do not, because that will affect your score.
Yes. Yes. Oh my God. I have to give this other very quick story. This is all 100% true. Deb, with the case we just had, the person thought we had applied for a home for the holiday grant. Everywhere there's grant money, we're looking for it, right? So that person really took their time getting in the application. By the time they got the application in, something, even though everything in writing, every conversation said, you may or may not get this. That person decided to take the money from out of their bank account close to closing to start buying things with, utilize the funds, and had no money for closing.
Well, that was last week.
It was unreal. And let me tell you something, they're going to do a check all the way up into the day that you close to make sure that you have the ability to get to the finish line.
But
these are true stories. I couldn't make this up.
This is absolutely true.
I couldn't believe it.
But here's another thing. If you start using your credit, the way technology is, it dings the credit report. It dings it of the credit that we have in there, and it shows that there's inquiries on your credit. So then they come back and ask us, there was inquiries on this credit. They must be applying for credit. So do not apply for furniture that you don't have to pay for 3 years, no interest, because it shows up. And also with your job, we call 10 days prior to verify. We don't ask salary. None of that can be asked over the phone, but we call prior to closing to make sure you're still employed. Do not quit your job. I had a client, we called, he was approved. They called and they said, oh no, he gave us 2-week notice. I'm like, are you kidding me? 2-week notice. So I had to tell him, I don't care what you do. I don't care what you tell your employer. You need to go back to that job. You have to go back to that job and tell them you made a mistake, because you're not going to close on your house.
It's so true. And these are like I said, really, really real things that happen. And so as we just try to, make sure that we're covering every detail to impart knowledge upon you as you embark upon this amazing opportunity to thrust forward into home ownership, that you're equipped with information and decision making. I always say it's so important to be a contagious saver. Save and save and save. Stuff that you're not using, sell it. Put the money up. Keep building, keep building. Even with the Section 8 program, they will tell you that you need to have $3,000. But there are some cases where a person is approved for higher and they need more money. They need more money. And so it really depends on your particular situation, what you're approved to buy and everything else. Now, your lender will work closely with you to share that information with you so you have an idea of what you need to bring at closing. So you might hear from the program, hey, as long as you save $3,000, yeah, that's fine. That's probably in a certain box, right, of a certain home with a certain this and that. But if you step out of that box because you're approved for a little bit more, then you may have to put down more. So while I'm telling everyone, the most important thing is start putting your money up. Save, 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 build, build, build. Be prepared. Learn how to say no to everybody who wants something. No, I can't do that. No, I am building my future. No, I am building my funds for my future and my family's future and my children's children's future every single time that we invest into a home. And I want to tell you, the same gentleman that I gave as an example who got the layer grants, he has a 30-year mortgage, what he opted to at his age. He opted for a 30-year mortgage. But on top of that, because of his income, CHA pays almost 90% of his mortgage. Wasn't he about 90%?
Yes.
From my memory.
Yes.
Yeah, 90%.
It depends what your income is. It depends on your age. So what your age is, and it depends what your income is. But if you're on Social Security, SSI, yes, you get, and you're not working and that is your income, yes, your voucher is much higher. Correct.
Exactly. And so even for like another example of another young lady, she works, she's on the program, she's been in the program for a longer time. She was approved for like 200 and something $1,000. We worked to help her get a home, helped her get some grant money, and Section 8 still paid a few $100s of hers, but it was still helpful because they helped with some of the other fees. She was able to build up some points and different things like that. And she still has mortgage assistance. So for individuals who get into the program, when you first come aboard, I just want to tell you, when you go out there and you go through all the training that they have, and they say to you, hey, now you've completed all of this training, you are ready to get pre-approved for a mortgage. And when you will go to the bank, you will get pre-approved for a mortgage, right? They typically have a set of lenders that they suggest because the lenders understand the program. And so you would, pick one of those lenders. Now, I know Deb is absolutely phenomenal, but you will pick from that lender just like they give you a list of realtors, right? And so these individuals are supposed to have experience. Once you have your pre-approval for the amount of money that you got pre-approved for, you will come to your real estate agent. I want to talk about something very important, and we touched on it just a little bit earlier. When you come to your real estate agent saying, I got this pre-approval, I am going to ask your lender, what did you put the taxes at? What did you put the insurance at? Some realtors, even that's been doing this business for a long time, never think to ask those questions. They are critical questions for me to even begin my search. Once I do a search, I get on a Zoom call with my clients immediately because I want them to see with their own eyes what their price point could afford them, where the items are, where everything is at, and I let them click through everything. Say, for instance, someone got approved for $130. I'm going to go to $85,000 to start, and I'm probably going to go up to about $150. Right? In this market, it's not often that we're getting something less right now. It's not. I'm being honest with you because we're in a seller's market. So nevertheless, it's not stopping people from taking advantage of the low interest rates. Because if interest rates go up high, it don't even matter if your place is cheaper, you're going to still be paying money directly to the bank. But nevertheless, in this particular situation, we would then scroll through each property because I want you to understand where the value of your dollar is, right? Sometimes some people in the program come back and say, some of the realtors have only shown me so much. Wait a minute, I'm going to show you everything that you can afford to do on a Zoom. And then you're going to tell me what you think about that. And then we're going to build a plan for your success. And the only thing I know for sure for that person who decides to persevere and to push through this situation, sometimes miracle manifests and great things happen. One of the ladies that Deb and I worked with, she got a brand new house built from the ground up. Did she not, Deb? Part of a program for $170,000 off of 107th
We got two of them.
Street.
Yes. It took her over a year. She was in the choose to own over a year, and brand new house, 170. She's happy. She loves it. Brand new. Yeah, there were obstacles. The builder was supposed to have it done way before over a year. They didn't, but the house is brand new. Brand new.
And it was, she went through things of wanting to give up and just find another place. So, but when we went out to go look at other places, nothing compared to that one. But that's the kind of faith you have to have a mustard seed to know that if you are walking through this process and you have made a definite decision, listen, I am going to own a home and nothing is going to stop me. Nothing will stop you. And for those people that just come in with that state of mind, I don't care whether they're in the CTO program, just another person who working a job, don't have no support and want a home, whether it's a person that got every degree in the world with a high profile job, or somebody with less of none of that. When that person comes in with a positive state of mind, a positive attitude, and they're ready to hit the ground running, they are going to finish the race, and the victory is going to be them walking into a home that they now can unequivocally say, this is mine. And this feels good to know
Wow.
that this is mine.
Wow, thank you so much for all of that. Ms. Cole, they're asking for your information also, so please let us know how we can find you. So we do have a question in the chat. Ms. Brenda is saying, is the suburbs tax higher than the city? Why is that?
Well, it depends. Real estate taxes, it depends. Some suburbs are much higher than the city of Chicago. We gave an example. I gave him an example for the South Suburban. I also know Maywood, their real estate taxes. I have people that bought houses over there for $100,000, but their real estate taxes were $7,500 because they have nothing to bring in revenue, so the taxes are much higher. I know in a suburb over here in Chicago near O'Hare, Rosemont, those people pay no taxes. They don't pay real estate taxes because they don't need to. That town brings in so much revenue from everything that they have going on there that the people don't pay the taxes. So it just depends what area. Not all suburbs have really high taxes. Some do, some don't, and it also depends what county you're buying in.
Exactly. That's a really good question. I want to just tell you, like, I've been working with a lot of clients right now who want to live in a suburban area, right? So I want to just give you a review of last week and where taxes were in certain areas. We saw some really good affordable taxes in Harvey, Dalton, Sauk Village, surprisingly. These are some of the ones where I saw the least amount of taxes in the South Suburban area, right? Some of the taxes in South Holland, I actually found a house for a client and I couldn't believe it because the taxes usually could be 5, 6, 7, 10 or more in South Holland, but we found a nice frame home with affordable, genuine taxes, meaning that there was no exemptions on them. And they were at about $2,500, right? And now this home is not your this big mansion. You know what I'm saying? It's not like that. It's a smaller home that need a little work, but she felt that I can go in here and make this mine. I can go in and turn this thing around. And the fact that it had lower taxes, it ended up working for us to get that process for her. And we just got an accepted offer. But on there, sometimes you may find a home that have a fixer-upper. But here's where I want people to be prepared for. Taxes have the ability to increase every single year. This is not to scare you. This is to equip you with education. Your taxes could go up whether you're in the city or anywhere. Yeah, I'm in the city. My taxes go up sometime. Now I'm able to go through and write a rebuttal and send information and try to keep fighting to keep them down. And some of the suburban areas where I believe maybe their taxes are higher, they have less people, right, that they have that are investing into their city. Their taxes are built to invest into their schools and to all the other things that are amenities for you to live out in their area. So they have to build a budget out on what it takes to make those things function and work. And that's how a lot of the stuff derives at prices for taxes across the board. So we never know what those taxes are until we literally do the research, go to the Cook County Treasurer's website, pull up in this case, it would be the 2020 full year bill. And one of the last things I want to say about taxes, which is a really good thing, although the bank will go back and add back in any exemptions and make the taxes for that house the full tax bill amount. The great thing about it is that the very next year, you're able to apply for your homeowner's exemption, which I highly encourage you to do. And you're able to then get an exemption and get your mortgage, it goes lower. So that's the benefit. It'll go down some. So when you add that exemption on there after the next year, it could potentially go down, $75, $85, $100, who knows? There is some particular calculations, and she could speak better to that.
The calculations on what?
Is there a specific calculation on a person when how you taught me how to go out on a Cook County Treasurer's office to build back taxes?
Well,
how do you
no,
take them away and know what your mortgage will be decreased to after you file homeowners?
Well, what happens is when you first buy the house, you're not going to get the homeowner's exemption. So I look up the tax bill, and if it's showing that there's a homeowner's exemption, a senior exemption, a freeze, you have to add that all back in, because the new homeowner who's getting that house is not getting any of that. You don't get the homeowner's exemption until you live in the house for 1 year and that you're the homeowner for 1 year. So if the tax bill is saying that that with the deductions, the homeowners and the senior and all that is $1,000, but it's showing on the listing that the taxes are only $1,000, they're truly $2,000. If $1,000 are exemption, you got to add the exemptions right back in. And that first year, your taxes are going to be $2,000. Then after you live there for a year, you apply and you get that homeowner's exemption.
All right. Thank you. Thank you for that information. We do have a hand raised, Miss Princess Alton. Please unmute yourself.
You would call on me when I just ate a cookie. Thank you all for your support and expertise. My question is pertaining to the process of bank accounts being monitored. How long are bank accounts monitored once you're in the home buying process?
Well, when you apply for the mortgage, we asked for the most recent 2 months bank statements, every single page, and not a transaction history. It has to be your complete bank statement, and that we need the last 60 days. If that's for the pre-approval and you don't find a house for another 2 months, then we need the last 2 months most recent. That's it. And if you're going to put money in your bank account, like money saved at home, we like to see that money has been seasoned for 2 months, for 60 days. So if you have money sitting around and you're not going to apply or look for a home, maybe the next 2 or 3 months, start putting that money in the bank so it can be seasoned and they're not going to question where these large deposits come from.
Perfect. Thank you.
Yes, I'm glad you mentioned that. If I could just add one other piece to that too. I think it's so important, right? What everybody is doing is so empowering for each individual that's on this call right now to be on this call, because it says that you're planting a seed, that you want to start growing into understanding what to do, how to do it. And most of all, it's going to narrow down to you deciding when to do it. And I want to talk about when to do it. I have a client right now. We're a year later in her pre-approval process, a little over a year. She got pre-approved. She got pre-approved for a really good amount, actually. Deb, actually, you were pre-approved her. And okay. She got pre-approved for a really good amount. And we went out and saw so many amazing homes. She had what I could sense off the energy of fear, a really deep fear of the comfort that she was in with the amount of rent that she paid. And so here it is now. We find a lot of places. She, procrastinated on moving forward, and then they weren't available. And then when we finally decided that we found one, now we're 6 months in, we have to rerun her all over again. Credit drops again, because now she's got to be reran, right? because now she's saying, okay, I'm really ready now. I'm really ready now. We go out and we find another beautiful home. She gets the home. You know, she talks to some of the neighbors. Neighbors say it's great. She talked to one neighbor say, oh, I don't like it over here. She comes back and say, I'm not moving there. Cancel the contract, right? This is so true. It's unreal. We cancel that contract. Now, months and months go on again. She still doesn't make a decision. Now we have to rerun her credit again. This is going on over a year and a half. What it boils down to it is that she really is comfortable where she is today. And she fears so much of the responsibility of the future and not knowing what the future holds for her. But if a person chooses to walk this path, there is so much more support for homeowners that may run into a situation than it is or ever have been outside of COVID for a tenant. So many different programs, so many different things to go through for support. You have to make a decision that every mortgage payment is an individual investment. Get yourself prepared and know that you're going to be ready and that you're going to move forward through the process, because you can get in this cycle of never making a decision, right? And then you're hurting your credit score. Now 6 months later, you're hurting your credit score. Now and this stuff is staying on your credit for 2 years for inquiries, right? And you're knocking it down more, True story. This other young lady, same situation, took a long time in making the decision. She was at a 642 or 3 in her credit score because she didn't make a decision on some of the homes that kept pulling out. By the time she made a decision, she had to rerun her credit again. Her credit made her ineligible because she was at a 637. It's just, I'm telling you these stories because they're real and they happen. So walk through this process when your heart feels encouraged to know that you're ready and nothing's gonna stop you until you get into that new home, because we don't want you to do anything where you're straddling. You know you better than anybody. Don't straddle with it. Take your time, build your confidence, and then walk through it boldly, ready to possess a piece of the land, to build a legacy, to change the numbers. I see some faces, I don't see them all, but I know that I see a lot of African-American faces. African-American families own 42% of real estate. And those numbers to our counterparts of 79% of Caucasian families, that is a massive difference. And we have to work to start changing those numbers so that you too can possess a piece of the land and live a part of the American dream that you desire to have. This is not something that is beyond what you have the ability to acquire. Just believe that more than anything in this world. Believe that. And then that what you desire the most will become your reality. I ask everyone, put a vision of a house that you love on a piece of paper. Look at it, write an affirmation and say that the perfect property at the perfect price, that's in perfectly divine order, comes to me quickly and peacefully, easily and effortlessly. Whatever it is that you desire the most, see that thing every day in front of you. So you can start believing it and you'll take the steps to manifest it. And before you know it, you will be turning the keys from my turn to own, your turn to turn your keys and walk across the threshold of your front door. And oh my God, there's no other feeling in the world like it. I'm done preaching today.
Wow, powerful, powerful. Thank you so much for all of that good information. We do have another question here, which is there any way to get funding without getting any loans?
Okay, so
Almost
funding,
save your money. That's the only other way.
right, to pay cash,
Pay
because
cash. Yeah.
to get money, you have to have something for collateral. Unless you do a signature loan, but you can't get that much money, which a signature loan is only on your credit score and you have to sign for it. So any amount of money, you would have to have something for collateral.
Okay, sounds good. And we have another question. Is this program only for Illinois?
To purchase a home, or are you talking about the
The
Choose to Own
CTO.
program?
Choose to own, yes.
Choose to Own is only in Illinois, Chicago.
Right. Now, there may be, if that person is going to another state, they need to look up whatever their housing program is in that state and call them directly to ask them if they have a home ownership program. I hope they do. Because,
well, I know they do, because when Roseanne was in charge over there at Choose to Own, she told me that Chicago was one of the model cities for the Choose to Own that ran smoothly. But yes, other states do have Section 8 vouchers and programs, yes.
Okay, perfect. And I'm going to go ahead and put that information up one more time for the programs, so you guys can get in touch with the people. So you can, if you have Section 8, you are more than welcome to visit them and also get into that program with them. Thank you both, Miss Deborah and also Miss Wheatley, for being on with us. This has been an amazing program for us all. Do you have any last moment words for our listeners?
So if you're on the fence and you don't know if you would qualify, you have questions, please contact myself or Nicole. Nicole and I work together on the Choose to Own. We do a lot with the Choose to Own, and we, if we need anything, we go right directly to the person who is the manager in charge of this program. And, we run things back and forth towards him. And that's how we're able to get exceptions for whatever that we ask for. So if you're on the fence, you don't know, whatever questions, please contact Nicole or myself and we'll be able to help you.
yeah. And the last thing that I would say, honestly, I'm going to just say y'all this. Everything I just said, the last was mic drop right there. That was it. Do this. Push through your fear. Make it happen. And believe in yourself through this process. And you will have a great support team to help you get to the finish line. But it is, as the name of this organization, My Turn to Own. When they say my, they're telling you to make it personal. That means you. It's your turn to own. Just remember that. Go to bed with it. Wake up with it. And then get it done. Mic dropped again, y'all. Mic dropped again.
Yes, ma'am. Always great information from these two. Thank you all for being with us tonight on this Wealthy Wednesday. Please join us again next week for another Wealthy Wednesday here at My Turn to Own, and invite some people. Please don't keep this information to yourself. Go ahead and share with your family, your friends, even your neighbors, anybody you know. Let them know that My Turn to Own has some information and resources for the community. Thank you all again, and everyone have a great night.
Good night,
Thank you, darling.
everybody.
God bless everyone.
Have a good
Yeah.
night. Everyone have a
Good
good
night,
night.
everybody. Good night.
Good night.
Blessed night, everybody.
A nice good evening.